Hey guys, I'm Suzanne. Today I wanted to touch on a topic that's been popping up a lot lately in our DMs and our comments, and that would be the fear of investing. A lot of you watching this channel are beginner investors, so understandably there's a lot of hesitation and uncertainty around investing and just managing your money in general. A couple of fears that stop people from investing are the fear of losing money, of course, the fear of just making a bad investment, but there are also some common myths or roadblocks that also stop people. So believing that you don't have enough money to get started investing, or just not having the information available to you to actually do that. So how can you start to combat these fears and roadblocks? First, start small. It's not just doctors and tech prodigies and millionaires that can invest. There's so many platforms now that allow you to invest with $0. They let you open an account. They'll let you invest with as little as $10, $5, $100, $1,000, whatever a small amount is to you, there's probably a platform out there that will let you get started with whatever that amount is. What's investing with a small amount of money really going to do? Like, if you're only investing $10, why invest at all? Well, because starting with a small amount of money to learn how to invest will do three things. One, it'll help you start building the discipline of investing. So as you start investing just a little bit at a time, over time, you'll get to see how that money starts increasing or decreasing, and it'll give you an idea of which platforms you like or don't like to use, and it may give you a good idea of what you actually like to invest in, because that is going to be different for everyone. And I've found that if you do only have a small amount of money to work with, trying a platform that has fractional shares can be really educational and actually really fun. When a brokerage allows you to buy fractional shares, all that means is that instead of buying one whole share, they're letting you buy a fraction of it. So for example, with Tesla, whatever it's at right now, or whatever it hit this last week, like $900, if you don't have $900 to buy one share of Tesla, but you have $9, that's where you can find a brokerage that lets you buy fractional shares, and you can actually get a tiny, tiny slice of a Tesla share. So it really just allows you to start getting into stocks that you may be interested in, that you may not necessarily have the money to start off with buying full shares. And two, starting out with a small amount of money is going to allow you to make mistakes and learn how to lose money. And what? Learn how to lose money? Why would you want to do that? Well, if you look at the entire span of your life where you could potentially be investing, is every single investment that you make going to be a good investment? Probably not. Probably at some point in time, you will choose to invest in something that's going to lose you money, or it's just not going to do as well as you thought it would. So if the fear of losing that money is something that's stopping you from investing, it's a lot easier if you start out with a smaller amount and learn how to recover from those little downturns, from a stock that doesn't do so well. It's a lot easier to reason when you're down $5 versus like $500 or $1,000, right? So if you start investing with small amounts, you can kind of start building that base level of logic and strategy for yourself. Then when you start increasing the amount that you're investing, you can kind of refer back to that logic that you built up for yourself when you were investing with small amounts. And you can ask yourself, is what I'm doing rational? Would I be doing the same thing that I'm doing if this was a smaller amount of money again? So it just builds a good baseline for you to learn off of. And three, it'll help build your confidence in your own ability to invest. So what I've said so far, it still kind of sounds unappealing. It's like, you're still saying that I can lose money? Well, yeah, but if you look at the stock market historically and what it's done, it's gone up and up and up. So assuming that it continues to do what it has done historically, which of course it doesn't actually have to, but assuming that it does, as long as you're actually doing research on what you're investing in, as long as you're keeping up with it and you're diversifying across different types of stocks, maybe different types of investments altogether, there's a very good chance that you will be glad that you did start investing. And just to put things into perspective, looking at that graph again, this is the Great Depression, this is the recession, and this is that little stock market crash that we experienced at the beginning of 2020. So even in those downturns, overall, the stock market went up. Okay, so how can you learn how to avoid making a bad investment? Well, the truth is you can't actually ever guarantee that you're going to make money on something, just like you can't guarantee that you're going to lose money on something. So a good general rule of thumb to go by is to only invest in what you know. But what does that look like if you literally know nothing about the stock market? Well, invest in what you know. You know about something. I know that you know about something. So the easiest places to start are with your hobbies or your career, and you can start branching off of those. So for example, I have a lot of friends that work in the animation and gaming industries. Those friends have a little bit more insight into, of course, gaming and animation, but also to different industries related to those. And this may take a little bit of brainstorming and research on your part, but let's use that same example of those friends. So not only do they know about, the big companies like Disney and Nintendo, but they know about the direction that those industries are moving towards. So like, what graphics processors are they using? Which computers do gamers use? Which streaming services are these companies trying to partner with? It's things like that. And so that is kind of a semi-tech related example, but even take the makeup company e.l.f. For a while, their stock price was declining pretty bad. And then sometime in 2019, Jeffree Star started posting e.l.f. makeup tutorial videos, and so did other influencers. And slowly that stock price started to go up. And not that that was necessarily the sole cause of the price going up, but I'm just saying, if you were in the makeup world and you saw all of those reviews and tutorial videos and you were following those influencers, you would have seen that it started to gain popularity. And all I'm saying is that, would some stuffy corporate dude on Wall Street have known that a product that Jeffree Star was promoting would go up in price? No. Could you have? Possibly. So that's kind of just a silly example, but do start researching on things that you're actually interested in, because over the long term, those are going to be the things that you keep going back to and that you want to keep going back to. And that's one way to kind of just keep yourself interested. Still on the subject of losing money, something that you can do to offset some of the losses that you may experience is to diversify. All that means is investing in multiple things so that if one stock goes way up and the other stock goes down a little bit, it will kind of offset that loss. So one popular way to diversify is to invest in ETFs or index funds. All those are a big wide variety of stocks that are all thrown into one basket called an ETF or an index fund. And I can do another video on ETFs, but in a way, it's kind of like owning fractional shares of a company. But instead of going through and buying a tiny share of 500 different companies, you're saying, I want to buy one share of the basket that holds all those companies. Another thing that's going to be hard is hearing conflicting opinions from different people. What works for one person may not work for you, and I think that that can cause a little bit of hesitation and fear. So here are a few ways to combat that. I definitely think it's good when you're getting started to try out different platforms. You don't just have to have one investing account. Now, you don't necessarily need 10 of them either, but it may be a good idea to try out a couple of different ones. These investing platforms can be extremely different from each other, so I think it's a good idea to have a couple of different options in case you find out that you just absolutely hate one. You may mistake it for thinking that investing is hard or that you're bad at investing, when really it's just the app that you're using is horribly designed. So a super simple one to start out with is Robinhood. It's very clean, very minimal, and really beginner friendly, and it's pretty intuitive to use once you just open up the app. If you guys want to see it, I can do a little walkthrough tutorial of it, but pretty much you open it up, read how to use it, go swipe, 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 and you've bought a stock. It's really easy. Robinhood definitely wins on the user interface side of things. It's very clean and nicely designed. Some of the other apps you'll find not so much. Another option to consider when you're first starting out, or even if you have already started investing, is to use a robo-advisor. So what these are pretty much platforms where you don't actually have to do the stock picking yourself. Most of them will offer some sort of pre-built portfolio, and the one that I usually talk about is M1 Finance. And I like this because of how it's visually set up for you. So you would go in here and you can select a pre-built portfolio based on pretty much whatever you want. It's not a one portfolio fits all type of thing. You still have control over the portfolio you choose, which is super nice. And then you can come in here and you choose something based on how risky you want your investments to be or what the potential return would be. And then you can see a breakdown of what this is actually made up of. So the different stocks or ETFs that are actually in this portfolio that they've already built. So if you choose not to do their robo investing side, but you do just want to do the do-it-yourself side of M1 Finance, they do also offer fractional shares, which we love. I think that both of those platforms are good options for beginners, and they're actually quite different from each other. So just finding a couple of different platforms like that to compare could be a good idea so that you aren't just stuck thinking that there's only one option for how you can invest, because there are actually many. So maybe the most fun thing that you can do to overcome your fear of investing is to actually find a group of people who are interested in learning with you. In the next couple of months, we're going to try to start up a book club to help you along in your research and to just start reading books that are about good money habits and basic investing concepts. It will just be on Instagram and YouTube. So if you are interested in that, be sure to follow us on Instagram at Arvabelle. Send us a DM if you're interested, and if you have any book suggestions, leave them in the comments. Remember to subscribe, and I will see you guys next time.